You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. So how big was that snapper that you caught last week, mate?
Huge. You wouldn't believe it. You would not believe it.
Yeah, I've been trying to get some flatheads on the end of my line recently, you know. A couple of tuna, big tuna.
Yeah? Wow.
Yeah.
What bait are you using these days?
What bait? I'm using the X1000 turbo bait.
Nice.
Yeah,
really?
It's a good one.
Wow.
How about you? What line are you on?
I'm just on bread, you know. I just use bread as bait. On line?
Bread? Oh, fair enough.
Gee.
Yeah.
Now you've absolutely stumped me. I can't even make something up.
Well, I was like X1000. I don't know. Just say something that sounds fancy. And also, I like how it went from fishing for flatheads straight to tuna.
Yeah.
It shows you my knowledge of fish. Anyway, okay, that's the fishing update.
For those who are wondering, there you go.
How you doing?
Yeah, I'm good. It's this week's gone so fast, I feel like.
It has.
I don't know.
I feel like it was just like literally yesterday we were recording last week's podcast.
Yeah.
It's been quick.
I mean, even the year itself has gone fast. I feel like every now and then I just check the date and I go, wait, that can't be right. We can't be almost 2 months into this year.
End of February already. 2020. Just racing ahead. That's it. Time goes by. Yeah. So what do we got to talk about today? We've got quite a bit to talk about.
We do. Yeah, we've got a few different stories. We'll talk about the FAMG stocks.
To be honest, I actually think I don't understand why FANG is a thing. I actually think it should be FAMG. Like, why does Netflix get into the FANG? Why is Netflix talked about more than Microsoft?
That's a good point. I mean,
Microsoft's is it still the biggest company besides, what is it, Saudi or Aramco or whatever? It's still the biggest publicly traded company in the world?
Yeah, it is. Yeah, Microsoft the last 2 or 3 years, right, has kind of just gone on a tear. Whereas I think Netflix, prior to that sort of burst from Microsoft, was up there with the big growth names.
Right.
Which is probably where they came from.
Facebook, Apple, Amazon, Netflix, Google.
Yeah.
Kick Netflix out. Get Microsoft in
there. Get out of there.
Yeah.
Microsoft, you're in. You're in the A team.
Yeah. Yeah. Anyway, we'll talk about more of that. We've got, this is interesting, which we'll talk about more in the podcast. After what we were talking about last week, there's been like 3 or 4 news stories about different Australian companies coming out saying they've been underpaying their staff.
Yeah. We make a difference, guys. We
do.
We contribute.
We've uncovered the truth.
We've got the scoop.
Yeah. No, we've got a lot to talk about. We should probably get into it. We'll start just by mentioning our sponsor for this week, which is HyperCharts. So make sure you head over to hypercharts.co and check it out. As I always say, most of the stuff over on HyperCharts is free, but what HyperCharts tries to, what they do quite well, in my opinion, is they take all those financial numbers out of a company's annual quarterly report and they just put it into nice, easy to understand charts. As I always say, it makes it super easy to understand, quarter over quarter growth or year over year growth, just because you can see it. You can see it happening. Then from there, you can also check out now they've got a new feature which is called Private Financials, which basically, if you're a business owner, you can get the same in-depth charting that HyperCharts does for public companies, but you can enter in your own company's data. So you can get all that done up for your own company, which I reckon is pretty awesome. I actually might look into that. I saw Gally's video the other day where he actually showed his company Hyperchange on HyperCharts. So that was pretty crazy. So anyway, they do also have a premium mode, hypercharts.co/premium. If you use the referral code YIP for Young Investors Podcast, then you'll get a month for free, which is a pretty good deal. So
Beautiful.
Anyway, just go check it out, hypercharts.co. And thanks always to HyperCharts for sponsoring this episode.
Well,
man, that's always just smash it out.
Hold your breath.
Yeah. Or one breath. And I'd like to talk about HyperCharts.
Feels like that sometimes. No, but the first thing I wanted to talk about today was those FAMG stocks.
It just doesn't roll off.
It doesn't work well. It doesn't work well. Microsoft, you're out. Netflix, back in. But yeah, of course, we're talking about Facebook, Amazon, Apple, Microsoft, and Google. And there was an interesting report that came out of Goldman Sachs about how those 5 stocks, it is 5, isn't it? Yes. Those 5 stocks are basically holding up the entire stock market.
Really?
This was... The numbers that they've shown here are pretty crazy if you think about it. So... they reported that the S&P 500 from the previous earnings season, the last quarter that we just went through, had earnings growth of about 2%.
That's Q4 2019.
Correct, yes. So that's the top 500 biggest companies, or is it always the top 500, or do they have to get selected into the S&P?
Yeah, I don't know.
I'm not sure how it works, but it's 500 really big companies, and it includes all of the largest companies, of course, in the United States. But then when we just look at the top 5 companies, so we're looking at Facebook, Amazon, Apple, Microsoft, and Google, their earnings growth was 16% on average. So that group obviously did quite well. But most interestingly, if you take the S&P 500 and you take out those 5 growth stocks, the S&P 500 had growth of 0%.
Oh my gosh.
So,
far out.
Yeah. And I mean, to put the icing on the cake, they showed the Russell 2000, which takes the top 2,000 biggest companies, that had earnings growth of -7%.
Holy moly. So most of the US companies aren't actually performing too well. It's literally just being held up by quite literally 5 stocks.
Yeah. I mean, you take the S&P 500 without the FANG, 0% growth, the FANG, or the FAMG stocks, I should say, 16% growth. And then the Russell 2000 is even more crazy, where they actually had a decline of almost 10% or over 5%, which is...
and that's as an average across all those 2,000 stocks. So that's actually not good. At all.
Not good, no. Yeah, and I mean, this is basically just the result of the fact that those 5 stocks in the I'm going to stop saying it, it's really bothering me, but those 5 stocks account for 18% of the market cap of the entire S&P 500. So even though they're only a tiny fraction of the number of stocks, obviously, in that component, they make up most of the overall price of the S&P 500.
Wow, okay. So what, 1% of the companies make up 18% of the market cap?
Yeah. And I mean, of course, it's concentrated more towards the larger companies. That's completely normal because there's more smaller companies and then a few larger ones. But the last time that the S&P 500 was this concentrated, so this concentrated in 5 stocks, was in 2000, just prior to the tech bubble, where the top 5 companies at that time were Microsoft, Cisco, General Electric, that's interesting, Intel, and ExxonMobil. So,
right, okay.
Yeah, no shade towards General Electric there. Just they're clearly not a top 5 anymore.
Yeah, it's just surprising that they were once up there.
Yeah, it's interesting.
Man, okay, so the S&P 500 is being carried. That's crazy. That's actually really surprising stats. Man, imagine what would happen if just those 5 stocks had a bad quarter. Like how bad the results would look then. It'd be quite startling, I think. I mean, maybe it would wake up a lot of investors that are just investing right now saying, the stock market always goes up.
Yeah, I mean, the market's just been doing so well. And we always hear about the earnings out of these companies, but you don't so often hear about earnings out of the rest of the companies in the top 2,000, for example.
Yeah.
It's fascinating because obviously these 5 stocks have a big impact on the earnings, but also a big impact on how much the S&P 500 grows throughout the year. I'm sure the 30% or whatever the S&P 500 went up last year was significantly impacted by the success of these 5 businesses, which I believe all of them have massively outperformed the market over the past year.
You'd imagine so.
I know Facebook's up about 50 or 60%. I think that
Amazon's up,
Apple's up over 100%, I believe.
Yeah,
they had
Apple's
a crazy
huge.
year. So all of these businesses, they're receiving a lot of money from the big fund managers. Very well loved at the moment. But yeah, if there's a bad year for these businesses, then It's not
That'd
going to
be
look
interesting.
good.
I kind of want to see that happen, just to see if that would trigger anything. It's pretty crazy that like most of the stocks, the largest American stocks, are kind of like in recession territory, and then there's just 5 stocks that are holding things up. So what happens if they all start, struggling? Then we'll probably see some interesting conditions. But yeah, I don't know. Guess we'll wait and see. As we always say, that's the quote of this podcast. Yeah, we'll wait and see.
The Young Investors Podcast. We will wait and see.
Yeah,
should be our tagline.
Is this a good podcast? We'll wait and see.
Find out in the next episode.
Find out next week. Oh gosh! All right, I'm going to roll on into this next news story.
Go for it.
This is one that's a bit closer to home. And that news story is that the Holden brand, the car brand Holden, is being retired by General Motors. So we already know that they were kind of pulling out of manufacturing in Australia. That happened a couple of years ago now, I think, when they shut down, their South Australian manufacturing plant or whatever, where they made the Holdens. But anyway, now they've decided, General Motors has decided that they're going to shut down the Holden brand entirely. So the article reads, about 600 Holden employees will lose their jobs after parent company General Motors announced it would axe the iconic Australian car brand by the end of this year due to dwindling sales. GM International Operations Senior Vice President Julian Blissett said Monday's announcement would mean the overwhelming majority of Holden staff would lose their jobs by the end of June 2020. They also say that while 600 employees will leave by June, there's going to be about 200 that would remain in ongoing roles related to customer service, because the company pledged that they'll still give another 10 years worth of customer service to people that own Holdens, the Holdens that are in circulation. But yeah, pretty crazy. And a lot of Australians been disappointed by this news, and I think the Prime Minister came out and said he's pretty annoyed by the news. But I mean, business is business at the end of the day. So if the sales are just not there, then you can understand General Motors retiring the brand.
Yeah, I don't know a whole lot about this story, and it's not sort of an industry I follow too closely. But I did see that Scott Morrison, the Prime Minister of Australia, talking about how he was actually quite angry because I believe the government had been giving GM quite a lot of subsidies to continue to produce Holden cars, or not to produce them here. I mean to import them to here and maintain the brand. But yeah, that's kind of what's happened. And yeah, it's an interesting relationship between government and car manufacturers, and sort of how the government's giving them subsidies, but GM obviously is only going to continue bringing cars over as long as it's profitable for them.
Well, think about it this way. If the government was giving them some sort of incentive, then just to keep going in Australia, then things must be really quite bad for them to actually finish, close all ties completely. Like if they're still not doing well, even with government incentives or funding or whatever it was, then things must be pretty bad.
True. Yeah, that's a good point. And yeah, I mean, I'm sure you'd love to see Scott Morrison give Tesla a nice big subsidy to.
Oh, no chance. No chance. The Australian government announces a new coal-powered car. That'll be the next thing.
Yeah.
You put lumps of coal in your petrol tank, and then your car just motors along. It's great. It's clean coal technology. It's carbon dioxide. Carbon dioxide is actually a good thing, didn't you know? Yeah, plants need it to grow. Oh God.
So that's
Tell
it.
you what,
Sorry, go on.
I was just going to say I wouldn't be surprised if the government tried to pull some sort of something stupid like a coal-powered car.
True.
Oh God. Anyway.
Yeah. Well, I think have you got anything else on that story or?
Nah, that was it. Just kind of a sad story, but I guess you maybe could have seen it coming, considering they decided to stop manufacturing in Australia ages ago. But maybe there was hope that the Holden brand would continue with imports, but apparently not.
No siree.
No. All right. What do we got next?
See what's going on in China. So
yeah.
Oh, okay. So China's coronavirus epidemic could cost Australia a whopping $12 billion in exports amid warnings of that the crisis may trigger a recession.
Yeah, I saw this. Basically, the story reads that a new study found that as much as $4 billion could be wiped from minerals exports, and then other areas such as education was a big one, and tourism would really impact. The problem. Well, I guess the whole economic situation around the coronavirus. Because one thing that's interesting is that Australia's from Australia's top 10 universities, I think they stand to lose a potential $1.2 billion in fees from about 66,000 Chinese students, because obviously those students are at risk of cancelling their courses for the first semester. So you've got I didn't even really think about the education side of it, but you could have like massive reduction in those universities' revenue just because the Chinese students, which Australian universities rely on quite a bit, might not be coming for first semester, which is pretty crazy.
Yeah, I know that because I still receive emails from the university I went to, which was Monash University. I know that they pushed back the semester by a couple of weeks. So I think they pushed it back by 1 week. And then they said, okay, now the first week is only going to be online, so you can't come in. So it's actually 2 weeks pushed back.
Right.
And I'm sure even just that has significant economic impacts on their staffing and just their entire operations, which, I didn't think about it too much either.
It's interesting now because the coronavirus has kind of been going for a little while now. I think it's up to like 45 days or 46 days or something like that. Is that now we're starting to get these reports kind of being finalized and these estimates coming out as to what the cost might be. What else does it say here? The Centre for Independent Studies report estimates Australia losing export revenues between $8 billion and $12 billion, or about 7% of annual total exports to China, even if the epidemic is over by June.
Wow.
So that's a short-term kind of prediction, $8 billion to $12 billion. So what did they say here? $1.9 billion in tourism, $3.8 billion in education exports, $190 million in passenger travel services, and what did they say up top? $4 billion in minerals exports. So yeah, definitely starting to see some of those economic those economic factors be reported on.
Yeah, I mean, I can't say that when this sort of first started coming out, I just always think this is a short-term problem. It's not going to have long-lasting effects on individual businesses. There's always a lot of hype around it, but it's interesting to see. I mean, 7% is pretty significant. And even if, not that this is related to this, but you could imagine a business experiencing a 7% decline in their earnings over 1 year, even if it's just 1 year. That's quite a big drop in the cash that they can pay as dividends or that they can reinvest. Like, it is a sizable impact. Over a 10-year period, it's not going to matter. But in the 1 year period, in the 2 year, in the 3 year, it can have a significant impact. It's interesting. I wonder when all of this will be over, because I feel like the media hype is already over. Like, we don't see it on the media. I don't, at least. I don't see it everywhere still. A little bit here and there, but not as much as when it was in the first couple of weeks, where every day it was like everyone losing their heads. But
it's interesting that all of this economic impact is not even like a result of the actual illness itself. It's just a result of what we're doing, the rules that we're imposing to try and stop the spread of it. Because I believe the fatality rate is on par with just that of the common cold. So it seems as though, in my very uneducated opinion, like the lethality of it, I don't know if that's the right word, is not anything too out of the ordinary. It's just the fact that we're trying so hard just to stop it from spreading, and that's like all the things that we're doing to try to stop it spreading, like shutting down, the flights to and from and that sort of stuff. That's really what's causing all of these economic impacts, as opposed to like the actual illness itself, killing people or that sort of stuff, which I'd prefer it to be that way than the illness killing people. And that's the reason that the economic impact is so great.
That's a good point.
I think that 75,000 people have been infected now, and I think something like 2,000 people have died from it, which I think maybe actually is higher than the death rate from the common cold, but not drastically so, I don't believe.
Yeah, I honestly have no idea. Not a doctor.
Yeah, not a doctor.
Not a doctor. What's that from?
That's from the end of Brooklyn Nine-Nine.
Yes,
That's where I know it
from. Not a doctor.
Not a doctor. Oh gosh, it's funny how some of those little audio grabs stick in your head.
Yeah, and you just don't forget them. No, but this whole thing kind of it just sort of reminds me about this whole thing that's like, I mean, obviously it's a serious thing, and there's the serious component of this, but there's also this whole other part where people just jump on events like this to make people believe that short-term events are worth trading on and worth taking action in your portfolio.
True, yeah.
And I actually just released a video this morning sort of discussing somewhat about that, how... I mean, it was a bit of a... I didn't want it to come off as too bitter, but I just felt as though
you
there
were
was...
bitter, mate.
Yeah.
You were bitter.
Oh, man. I was fuming. Steam coming out of my ears. No, but I was just sort of talking about how there's quite a lot of YouTube finance content that is clearly not value driven. It's click driven. In the same way that there's sort of a broader problem with news online generally, where they just need to get your click so that they can run their ads and get their money from the ad revenue. And then the content of the article could be, completely valueless, or it could just be a completely different topic.
Yeah, there was a picture or a graph that I saw posted on Bill Gates' Twitter a fair while ago, which was comparing the causes of deaths in the United States and then what the United States media reports on most of the time. And for example, the actual causes of death, like a massive chunk was, heart disease, a massive chunk was like stroke and cancer. And then this tiniest little sliver was terrorism. Right. And then if you look at so that was the causes of death. And then you look at what the media reported on, there's just this tiniest sliver for, heart disease, tiniest sliver for stroke, then a big chunk for cancer, and then a massive chunk for terrorism. So it's crazy. I mean, it is just, the media is just click driven. I mean, they make money when they make you click. So just report the things that are going to get clicks.
Yeah.
And that's how they make their money, which is kind of sad because like exactly what you're saying, there's no reason for us to report so heavily on terrorism because it's, in the grand scheme of things, it doesn't kill very many people, but people will always click on those, those fear driven clicks on an article about terrorism, in the same way what you're talking about with finance. I mean, something happening short term to a company might not matter in 10 years' time, but it might generate the clicks for the next week. So people are going to report on it and make this shocking kind of narrative around it just to try and get more views on videos and that sort of stuff. We are seeing that a lot, that's for sure.
Yeah. I mean, I don't understand videos that just focus on like why a stock moved up in why did it go up 4% today? Like that kind of video was one of the types I was discussing. And I just think there's no value in talking about that.
Yeah.
I mean, I don't know. I mean, there's a lot of people and I should have made this more clear in the video. That when I was watching this back, I felt as though I didn't give a fair enough account.
No regrets.
No regrets, yeah. Slight regret, no. But I felt as though I should have given more credit to a lot of the YouTube finance community, because I think that there is a lot of people creating really good content. And there's a lot of people who just use some sort of clickbaity titles, but then they actually provide a lot of value in the video, which again, I'm not against that. I'm really just against content that is clearly driven towards getting clicks and making revenue rather than actually providing any value in terms of helping an investor. But
yeah, it's a select few people. It's
is.
a select few, yeah. And we won't name names, but I mean, you can tell. You can tell. I mean, I just don't like content that preys on inexperienced investors and preys on the fear of inexperienced investors and talks about, tries to generate clicks with short-term news, which really doesn't need to be, you don't need to invest based on this short-term news kind of stuff. That's the stuff. And like what you're saying in the video, the other thing that I hate, I'm so glad I don't do this anymore, because I was doing it for a while until I kind of woke up and I realized, like, what the hell am I doing? Is these kind of stocks that I'm watching videos. I did them for a fair while, and I guess a part of why I did it was very, like, they were very popular videos.
Oh yeah.
But at the end of the day, like, I was doing it for a while, and as I kind of got my strategy more nailed down, I was like, what am I doing making these monthly videos about these stocks that I'm watching? I mean, nothing's going to change in a month. If I'm holding these stocks, I'm holding it for like 10 years. So it's like, what am I doing?
Yeah, I mean, and it's, yeah, I mean, I made these videos at the start as well, and yeah, I mean, it's so tempting because when you have a small channel, you just want to get as many views as possible. You just want to grow. Yeah. You just want to have a chance to just get a little bit of momentum going, and that's kind of why you do it. But then, yeah, we sort of make the 3 stocks I'm buying or 3 stocks on my watch list, and you do that for a few months, and then you realize, well, there's no more stocks. Like, I only look at a few.
Yeah, exactly.
I only have maybe 5 in my portfolio and maybe 10 on my watch list. Like, I've exhausted them all within 2 months of those videos, and then the rest of it is just, I would just be lying. I would just be picking stocks that I'm not actually looking at, just because they're big names and because they'll attract attention and because I can put the Apple logo in the thumbnail or Tesla logo in the thumbnail. So yeah, it's I don't know. I thought it was an interesting discussion point. I wanted to spark a little bit of sort of debate or conversation in the comment section because I was genuinely curious about what other people think because they're so wildly popular. I just wonder if people realize that they're not super valuable, those kind of videos, but they just find them entertaining, which was some of the feedback that I already got. But yeah, thought it was interesting.
Yeah. No, I agree. What should we talk about next?
We should talk about, the man, Buffett. He did something.
What happened?
Not necessarily Buffett, but Berkshire Hathaway reported a new stake in the grocery chain Kroger. I think that's how you pronounce it. I hope I'm getting that right. But we don't know if it's Buffett specifically, but someone at Berkshire has been purchasing Kroger shares. They purchased 19 million shares worth about approximately $500 million. And that represents a 2.3% ownership stake.
Right.
Yes.
So it's either Buffett, Ted, or Todd. I think they're the only people that buy from Berkshire.
Yeah, that's right. So we don't,
because Munger doesn't even buy from Berkshire. Is that right?
Right. I'm not sure actually.
I don't think so. I think it's just Buffett, Ted, or Todd.
Yeah.
I think. So maybe it's one of those guys.
Yeah.
What does Kroger even do? Do you know?
Yeah. So they're basically a grocery chain, a grocery store chain. So
right, okay.
I've never been to one. I just read the description on Wikipedia, but I'm sure that from some of the photos I looked at, it looks like they're very similar to a Woolworths or a Coles maybe in Australia. Yeah.
Right.
So yeah, just a standard old grocery store, nothing too exciting, I guess, but that's kind of the type of investments Buffett or Berkshire kind of leans on.
Yeah.
They've been having a couple of, I haven't read too much about them, but they had a pretty tough year. Even though they had a really bad year last year, they were expected to comparatively look not too bad. But again, they missed expectations this year. So typical Buffett or Berkshire style investment where it might be a great brand, sort of a company with a big brand. Maybe it's got competitive advantages. Maybe Berkshire likes the management team, but it's a company going through some kind of short-term problem that they expect will turn around, I guess, in the near term.
Right.
Something interesting else out of this that I thought was interesting was the question about whether Buffett is building a big position or whether that's kind of it. Whether half a $500 million is it? So it's funny how that's a small position, but $500 million is that it? Or is he going to go on and buy 10, 15, 20% of this company and make it a big substantial position? And I saw an interesting comment on Seeking Alpha that suggested that he probably isn't building a large stake. And the reason they suggested was that in the past, when he's wanted to buy a big stake of a company, he's actually gone directly to the SEC and asked them if he could waive reporting the stock ownership. So meaning he went to the SEC and said, hey, I want to buy a lot of this stock, but if I have to report it, it's going to ruin my chance of making a big investment under the radar. So can I waive my right to share my stock ownership, or my obligation to share stock ownership? And
I didn't know that he could do that.
I mean, it sounds sketchy, but apparently he can do that. And this time he didn't. Apparently that probably means that, or according to this one person that I read, not apparently, but that it appears as though they're likely finished, because otherwise, they'd be.
Yeah, I can understand why Buffett would do that though, because there definitely is the Buffett effect.
Oh yeah.
Definitely, where if Buffett buys into a stock and people know, like he buys into a stock for the first time and people know that he's doing that, then they also buy in. Lots of copycat investors out there. So I can understand why Buffett would at least go and ask. And I can probably understand why the SEC might be open to allowing that from Buffett, because otherwise it's a little bit unfair if Warren Buffett has to say, look, we're buying this stock, we want to buy a lot of it, but we can't, with the rules, we can't buy a lot of it because people will just start buying, drive the price up, and then we won't be able to buy at the price we want. So I can kind of understand both sides, but it does sound a little bit sketchy at the same time. It's like, I mean, those rules are there for a reason. I mean, you have to disclose what you're buying. What is it? I can't even remember if you control more than like $300 million or something like that. Is that I can't remember what
for having to report.
Yeah.
I'm not sure about that, but I know that if you own more than 5% of a stock, you have to report within the company's biggest holdings.
Does that happen? Does that happen immediately, or does that happen like quarterly? Because like the 13F quarterly is the thing that I was thinking about, and that's if SEC Form 13F quarterly report that is filed by institutional investment managers with at least 100 million in equity, right? And that's every quarter.
Yeah.
So maybe I don't know.
Okay. Yeah.
Could be either.
Yeah. So that must be for the 13F. That's something separate to what I was just thinking about.
Yeah, because you're right. If you're a more than a 5% holder, that needs to be disclosed as well, doesn't it?
Yeah, in the specific company. So it's either if you're a director or you own more than 5%, you have to disclose your holdings in that company.
Okay.
But yeah, so I guess so he would have to report this stake in the 13F. But he wouldn't have to report it in Kroger yet because he's only a 2.3% owner.
I see.
So that makes sense.
Yeah.
Yeah.
Yeah. Okay. Oh, very interesting. I don't know much about this company, so I can't really add much to the conversation. But I guess it will be an interesting one to follow and see if he keeps buying more or whether this is truly it.
Hey, Brandon.
Yes.
We'll find out if it's.
We will find out. I thought you were going to give me bad news just then. I thought you were going to be like, Brandon, my audio's cut out.
Brandon, I haven't been recording this entire time.
Oh my gosh. Jeez, you made my heart skip a beat there for a second. I was seriously expecting bad news. But yes, you're right, Hamish. In true Young Investors podcast fashion, we will find out.
We will find out.
At some point in the future. All right, I'm going to rattle through these next. There are a lot of news stories today.
Lots.
Of Australian companies coming out and saying that they have been underpaying their workers. I kind of wonder now if, because there's been a couple of companies that have come out and said they've been found out to underpay their workers, whether now all the companies are just trying to air their dirty laundry at the same time. That's kind of like get it out there so that it's all out there and it might get confused in everyone else's bad news. You know how some companies, if they're going to have a bad quarter, they try and stuff everything bad into that one quarter, just so they don't have to report it later.
It's
wonder
true.
if they're airing dirty laundry like that. But
could also be that the spotlight is on these kind of companies now. That maybe, a couple of them have come out that they're like, oh, don't want to get caught. Not reporting it if we actually know that this is happening. So it's time to come out.
So maybe we come out first and say, oh, we've discovered this. Yeah. We're so sorry. Instead of being found out, they discover it and then release it. That could be a sneaky tactic as well. But nonetheless, I mean, it's pretty horrible. Like, this is by far the most recently reported bad news out of companies. It's just they're underpaying their workers. So what have we got? We've got Coles came out and they said they were underpaying their workers by $20 million. Then we had Target come out. Well, their parent company, Wesfarmers, came out and said that Target staff were underpaid by $9 million. And now we've got the Super Retail Group, which is Rebel Sport, Macpac, and Super Cheap Auto. They've announced that they've discovered their own underpayment issue, but they actually said that previously, but they've now come out and revised their number, and they've added another $8 million to the irregularity. So, yeah, they're all coming out. And in each news story, of course, the CEO of each company is very apologetic. They say that they are very sorry and that they're doing everything in their power to correct the issue. And they assure us that it won't happen again. So that's nice.
It won't happen again until next week.
Yeah, until next year. Yeah, until we add another area to our business.
Yeah, a new area to exploit.
New acquisition. But it's just crazy. I mean, they're just all coming out now. There's a lot of Australian companies. I just feel like if there's that many people coming or that many companies coming out, I mean, surely that's a sign that the regulations or the investigation into this kind of stuff needs to be better in Australia. Like, surely.
Yeah,
I don't know.
No,
that's my view.
I
think
there's no doubt that there's so many businesses. There's so many even just big businesses.
Yeah,
that there's just
not enough.
It seems
so common.
It does seem so common. It's strange. Maybe they could just have more regulations with this specifically. So not other things, but just wages. Just making sure that companies are nailing their wages down. And
maybe heftier penalties or something.
That's true, yeah.
So they're taking a bigger risk if they do something like this.
That's true as well, yeah. They don't necessarily have to actively go out and, I guess, regulate it. They can just increase the cost to the business if they fail to do it, and then they will up their spending in-house to make sure that it doesn't happen.
Yeah, because that's like what we're talking about with, you know, those companies that break antitrust law and they get these fines, but it's just the penalty is just not significant in the slightest, so it literally doesn't affect them at all.
Yeah, it's like a bet. It's like they just play the odds, and if they lose, they don't really care.
Yeah, maybe they just count antitrust fines as an ongoing cost.
It's the cost of business.
Maybe they weigh up the return on investment or the return on breaking the law versus the cost of breaking the law.
Yeah,
and maybe it's still positive.
That's an interesting discussion, because I very much wonder if that is a conversation that executives have, because that's an illegal conversation to have. You cannot make a business decision based on breaking the law just because the odds of you getting caught is low, or that the fine is low and that you can balance it out in other ways. But I'm sure that there are companies that have those discussions.
Oh, I'm sure. I mean, yeah, the amount of dodgy stuff that we see happening in large public companies around the world, I mean, I am sure that it would happen. Those discussions would happen in some, like, even though it's very illegal and very immoral. Yeah,
true. Immoral is probably a more even stronger. Yeah. Just get the legality out of it. It's just immoral.
Yeah, it's just immoral. Yeah, I mean, okay, we might get away with underpaying our hardworking staff and, you know, not supporting our, you know, staff to put food on their own tables and support their own families. But is it worth it? I mean, it's horribly immoral, but I still think it would probably, those discussions would happen. I mean, for Christ's sake, Volkswagen not a few years ago, instead of changing their engines to emit less nitrous oxide, they put devices in their tailpipes that temporarily beat emissions tests and then broke.
Yeah, that's horrible.
It's a massive company. We could do the right thing and not poison the public with nitrous oxide, or we could just cheat the test, and then our little thing in our tailpipe breaks and it starts. It was literally spewing out 30 to 40 times the legal limit for nitrous oxide emissions.
Wow.
30 to 40 times the limit. It's stupid. There's a lot you can talk about when it comes to ethics and ethics regarding company leadership and that sort of stuff. But for Christ's sake, just pay your workers right. Australian business. If you out there are listening to this podcast and you're an Australian business owner, please just pay your staff correctly. Far out.
God damn. Actually, speaking of one of these companies you mentioned here, Rebel Sport. When's the last time you went into a Rebel Sport? Do you go in there?
I feel like I've been in there not too long ago, but I don't go in there very regularly.
Kind of ruins Okay.
I think like last year I might have bought a pair of shoes from there.
Right. Okay. Yeah. Fair. I guess I
don't go in there very much.
Yeah. I guess their shoe sort of component of their business would be around for a while because people still want to go in and buy shoes. But I feel like
you want to try new shoes.
I feel like that's kind of a retail store that might not last too long.
Just because you can just buy the stuff you want online.
Yeah. Yeah. I don't know. Just noticed there. I don't know what MacPack is. Is
that like I want to say it's like mountain climbing gear?
That's where I went. That's where I went in my head, but I'm not sure.
Or like camping stuff.
Camping could be MacPack. Send us a message. Let us know.
MacPack, we would love you to sponsor this podcast. So if you could reach out to AussieWealthCreation@gmail.com, that would be fantastic.
You too, Rebel Sport. We love your brand. Always going in there.
Inspired by New Zealand's outdoors and MacPack's outdoor clothing, backpacks, and camping equipment. There you go.
Wonderful.
Oh, we could do such a good ad for you guys, MacPack, if you're listening.
Brilliant ad.
We could.
Just call us up. You
with men's, women's, kids, camping, hiking, packs. We've got all the brands. Well, they actually do have a few brands.
Oh, we just gave them a free sponsorship. So
yeah, I take that back. I take that back. MacPack, how's this for a strategy? We will anti-sponsor until they pay us otherwise. So we'll say, everyone, do not buy MacPack. It's terrible. I have had bad experience. You just like start slamming these different companies until they pay you to stop.
Yeah,
I'm sure that's illegal.
Yeah, I feel like that's a bit of a shakedown.
Oh dear. I'm sorry, MacPack. I take it all back.
We love you. Well, not the.
I like the name.
Not the underpaying staff bit, but the rest of it sounds okay.
Yeah. Yeah. Pay your staff better, but we still love you. All right. Should we do a couple of Q&A questions before we finish?
Yeah.
Have we got any other news stories to talk about? I don't know if we've skipped over any. I don't think so. I think we're all good.
Yeah, we're all good.
Yep. Let's do some Q&A, hey?
Let's do it. All right, what have we got? Here's a question for you. How to buy stocks in today's market at their record highs?
Oh, golly gee. I feel like we answer similar questions to this quite frequently. Do you feel that as well?
Yeah.
It's a tricky time. It's a very tricky time because, if you look at valuations, most of the companies, there are always going to be companies that are undervalued out there, but most of them are quite overvalued. But I still think there's really two main ways to look at buying stocks in any market conditions. That's either passive investing or active investing. Passive investing is just where you diversify across the market, dollar cost average, and you just keep going and eventually average out to the market return. So I don't think you need to change anything there. And then you've got the active investing strategy, which I don't think you need to change anything about that strategy either, because part of that strategy is only buying stocks when they're at good prices or when they offer you good returns going forward based on your valuations. So, that if you're an active investor, you don't need to change anything. It's just you're probably not finding too many companies that you can sink large sums of money in and still get really good potential long-term returns. But yeah, you're probably just collecting more cash as opposed to investing heavily at the moment. Yeah.
No, I'd agree with that. And I think, this could we could bring this back around to the how the Russell 2000 was down 7%. If you're looking at the top tech stocks, the big companies, you're going to have a hard time finding a really good deal if you're active investing and you're trying to make some conservative estimates of where that company can be in the future and then still make a high return. That's probably going to be tough in today's market, but there are certainly pockets of the market where companies aren't doing that well. And as long as their stock prices are reflecting that short-term effect, then you could find some opportunities there. But yeah, your strategy doesn't change too much. Just stick to businesses you understand and estimate where they'll be in the future. Be conservative and have a margin of safety in your valuation for errors. That's basically it.
That's basically it. Yep. Exactly right. It's just annoying. Like, I can totally understand people's frustrations though, because we're always talking about investing. Yeah, investing is so good. And then it's just like, come on. I feel like, I guess it's fear of missing out. People feel like they're missing out because they're not finding those opportunities. But yeah, I definitely encourage you to really go back over maybe your circle of competence, because exactly what you're just saying, it's really those big, tech giants of the world, which is unfortunately what I'm really interested in. But the tech giants of the world are the ones that are the really overvalued ones. And if you kind of take a step away, maybe into some smaller industries or whatever, you might find some good options there as well. All right, next question here. Have your thoughts changed on cryptocurrency?
That's a good, that's interesting question.
Because I feel like I haven't talked about crypto in a long time.
Yeah.
What are your thoughts?
No, I haven't spoken about it in ages. I haven't even thought about it in a long time, I know. My thoughts haven't changed too much. It's the same. My principle about crypto is it doesn't produce any cash, so I can't use it as an investment vehicle. Because I can't work out what I'm going to get out of it. I can't come to an estimation of what I'm going to get out of it. And that just makes it not investment grade for me straight away. But in terms of cryptocurrency itself, I like the idea, and I can definitely see that it will have some very important applications in the future. And I have no doubt that cryptocurrency generally, not specific ones, but cryptocurrency generally will be used more, and I'm sure the value of them will become higher, but we just don't know which ones are going to take the lead on that.
Exactly.
And it's not something I want to have as an investment in the same way that I don't want to have gold. So it just doesn't produce cash, and it's not something that I would want to invest in. What are your thoughts?
Yeah. No, I agree. I agree pretty much entirely just with what you just said. I think that there's probably some good things to be said about the blockchain technology, but I think that the problem is that we, like what you're saying, we just don't know what cryptocurrency is going to be, the one of the future. I also think that we're so ingrained in using our current currencies around the world that I think even if, say, Bitcoin is the future of currency, I just feel like you're going to be waiting a long time for it to be for like governments or institutions around the world or whatever, just to start implementing it, using it as like a primary form of currency. There's so much development that will need to happen, so much change that will need to happen. I just think that even though there's positives with blockchain technology, I just feel like we're so far away from it being what everyone says is the next big thing in terms of, currency and that sort of stuff. So, I don't really have a super strong opinion because I'm pretty uneducated. I haven't really looked into it in depth. I only understand it at a basic level. But yeah, again, for me, it's not something that I look to invest in. I don't think you can technically invest in it because you can't model what return you're going to get from. That's the whole idea. Even you just look at the word investment. Investment is, like buying into something now because you know that in the future you will get paid back more for it in some aspect. Whereas with Bitcoin, you just don't know, or not even Bitcoin, with any of these cryptocurrencies, you just don't know because it doesn't produce cash. That's exactly what you said. We invest in cash producing assets because we can try and model them out into the future and figure out what we're likely going to get or have an estimation as what we're going to get. But you just can't do that for Bitcoin.
Yeah. Yeah,
because it doesn't make cash, doesn't produce cash.
Doesn't produce cash. Yeah, I get that comment every now and then being like, well, Bitcoin's outperformed the S&P over the past 10 years.
Yeah.
I'm like, I don't care.
It's like, a lot of, good on it.
There's a lot of,
no one knew what it was 10 years ago.
Yeah, there's a lot of things that have outperformed my portfolio, the S&P 500. There's a lot of things that have outperformed me, but I don't really care. It's not like I sit here and wonder why I didn't invest in them because if I don't understand them, then why would I worry? It's like I don't know, like a lot of people would probably be sad that they missed out on the big Tesla run up. But I'm not going to be sad about that because I would have never known that it would have been a safe investment. And if I had invested and it had fallen, I would have, you know, it would have been terrible. It would have been a terrible mistake. So,
even myself, I will admit that I wasn't entirely sure. Like, I'm a long-term Tesla shareholder, but I'm the first to admit that it is a speculative investment and it's a small portion of my portfolio because, like, even for me, like, I like the operational stuff that they're doing. And I think in the long term, they might, you know, grow into the future, but I still struggle to put a good, like, value on their shares. And I struggle to accurately kind of understand what kind of return I'm going to get in the future. So, yeah, I mean, exactly right. Even I, as a Tesla shareholder, did not see that run up coming at all. So, yeah.
That's it. That's all we got. Do we have any other questions?
So I just had a sip of water. This question: did you buy Tesla? That was pretty funny.
Brandon did. I didn't. There you go.
Yeah. Yeah.
Good job, Brandon.
And therefore, I'm a better investor than you because now I got a big return.
That's it.
How does that statement make you feel, Hamish?
Well, I mean, in all seriousness, though, if Tesla goes on and defies the odds and becomes one of the biggest manufacturers, even a small position in Tesla will make you a lot of money. So you'll do very, very well if that play pays off. And
I wouldn't sink your whole portfolio in it though.
No, I wouldn't sell your house. I wouldn't mortgage your house.
No.
Wouldn't be.
Yeah, it's very, very unpredictable. Oh, we were so close not to talking about Tesla.
Oh, we were too.
We were so close.
Sorry, guys.
Sorry. Apologies. No, I think that's a good place to kind of round out the podcast for this week. We've talked about everything. I believe we've covered everything we're going to. So I think that'll do us. Thanks very much, guys, for listening. Make sure, as always, you leave us a comment on the YouTube version of the podcast if you want to ask us a question for next week's podcast. Remember as well that the Young Investors Podcast on YouTube now has its own YouTube channel. So go and look up the Young Investors Podcast on YouTube and subscribe to us there. Ask a question in the comments section there. And that'll do. Do we need to say anything else? I don't think so.
Nope, that's it. Thanks, HyperCharts, for being the sponsor. And you can use referral code YIP. That's for Young Investors Podcast if you want to get 1 month free. Is that right?
Yes.
Cool.
Definitely. All right, cool. Well, that'll do us for today, guys. Thanks very much for listening, and we'll talk to you guys next week.
See you guys.